Hello there, welcome. Good to see you. So today we'll be talking about the market volatility currently going on. For the past 2 months, I've just had to watch my portfolio decrease week after week, and I actually even thought about withdrawing all of my money. Yeah, but I'm not going to do that, and today I'll tell you why. For many of us, including myself, this is probably the first time in our adult lives that we've experienced something so crazy going on with the market. So what do? Do you withdraw all your money? Do you just sit by and ride it out, or do you buy stocks? How do you react to such a situation? If you're young and there's still a couple of years before you need the money that you've been investing, I'm going to say this: it's best to stay invested. So the first thing that I'm going to say is avoid making any emotional decisions. You've probably experienced this. Investing can feel like such a roller coaster ride. When the markets are high, it feels great, you feel euphoric and it's exciting. But then they eventually come down, and that feeling of the market coming down can have you feeling very disappointed and very sad. In fact, investing can sometimes feel like a battle between your head and your heart, but only this time your money is involved. It's very hard to stay calm when every time you browse the internet or you read a headline, it's just news oh, the whole world is falling apart, or stock markets will fall even more. It's very hard to resist that emotional pull to just sell every single stock that you have. Just because of what's going on. But you're not alone. In fact, even professional money managers also experience the same trouble of just being able to remain calm. Now remember, your investment decisions should always be made based on your financial goals and not by market movements. Second thing that I'm going to recommend is that you self-isolate from your portfolio. The reality is no one likes losing money. And although we're all self-isolating, it's still very hard to ignore the current news going on. So, but just because we can't ignore the news doesn't mean that you have to check your portfolio every day or even every week. So what I've done in the past few weeks is that I've actually stopped looking at my portfolio, and I'm self-isolating from it for the time being. And I'll revisit again maybe in the summer. I'll look back at it again, but for now, in order for me to avoid making any decisions that I don't want to make, I'm self-isolating from my portfolio, and I'll recommend that you do the same. So remember to keep the big picture in mind, whether you're saving for a world trip or for your wedding, or you're investing for your retirement, whatever goal it is, if it's still a few years from now, keep the big picture in mind, and just know that your portfolio will most likely recover. Here's a quick fun fact. Did you know that since 1987, every major US stock market decline has reversed itself between 21 to 68% within 12 months? Next, remember to buy and hold. You ask why? Well, it's because whether the market is going up or going down, you're most likely to earn real value if you just buy and hold it for the long haul. So a smart strategy will be for you to just stick to your regular investing schedule, whatever that is for you, and make sure that you have a cash reserve, and that way that you can buy when the opportunity presents itself. The other thing that I'm going to say is do not try to time the market. Even professionals don't get that right. So if you're investing for something that's 5 years or 10 years down the line, a downturn in the market usually represents a good opportunity for you to buy. Think of it this way. If your favorite pair of jeans is on sale, you'll buy it, right? Because you've been meaning to buy it and now it's on sale, then you're just happy that you got it at a lower price. So it's the same thing that's going on in the market now. And for what it's worth, especially for a lot of people my age and a lot of young people, the market had been rising and rising for as long as we've been adults. And this is the first time that we actually have a chance to buy stocks at a cheap price and hope that the value will increase. So if you had already been planning about investing, like doing so when the market is low can actually lead to a lot of gains in the future. Just remember that like you sitting out at the market now could potentially lead to like you missing out on like some very, very profound like price gains in the future. Historically, it's been shown that if you can ride out the market while it's low, then like your investments will be able to recover and make strong long-term gains. So what is the final verdict? Well, if you're years away from your investment goal, then I would recommend that you stay investing and carry on making your regular contributions to your account. And what if you don't have a long-term financial plan? Well, now is actually like a great time for you to sit down and plan one and try on sticking to it. This will be very, very beneficial for your financial well-being as well as for your mental health. And that, my friends, is the tea of the day. Cheers!